Let's talk about life insurance. For a lot of us, it's one of those things we file under, I'll deal with that later. It can feel a little complicated, maybe a bit uncomfortable to think about, and we often have this idea that it's only for certain kinds of people. But what if that whole assumption is just wrong? Okay, let's dive in, because today we're going to re-engineer the way we think about financial protection.
So, I want to kick things off with a question for you. Picture two people. First, you've got someone earning a solid $80,000 a year. Next, you have a stay-at-home parent, juggling the household, 2 kids, but with no formal paycheck coming in. Now, who needs life insurance more? Just think about it for a second. The answer might not be what you expect. And the answer is both of them. Absolutely. And it's not even a tie. Each one provides a critical, irreplaceable financial value. If that value were to suddenly disappear, it would send a massive shockwave through their family's entire life. You see, protection isn't just about replacing a paycheck. It's about protecting everything and everyone you love. In this number right here, this is the hard reality we're talking about. Research shows that nearly half of all U.S. households would face serious financial trouble within just 6 months if a primary wage earner died. 6 months. That's how thin the financial safety net really is for millions of people.
So what about that stay-at-home parent? We often say their contribution is priceless, but you know what? It actually has a price tag. A big one. If you had to hire people to do all the jobs a stay-at-home parent does, we're talking childcare, cooking, managing the home, you'd be looking at a salary of over $178,000 a year. That is a massive economic contribution that absolutely needs to be protected.
And that brings us right to the heart of our explainer today. We have to look beyond the paycheck to really grasp the true value of protection. It's about securing the entire foundation of your family's life. Whether that foundation is built on a salary, all the work done at home, or, as is often the case, both.
So to do that, we need to shine a light on the risks you might not even see. Most families, without even knowing it, are exposed to 4 hidden financial gaps. These are the blind spots that can take a personal tragedy and turn it into a complete financial catastrophe. So let's break them down one by one. But before we dig into those gaps, let's just clear the air. Why do people put this off? Well, it usually comes down to a few big misconceptions. They think, it's too expensive. We're going to blow that myth out of the water in a minute. They think only the main breadwinner needs it, which completely ignores the huge economic value of a stay-at-home parent. They think, oh, my insurance from work is enough. And probably the most dangerous one of all, I'm young and healthy, I'll get it later. Waiting is a gamble you just can't afford to take. So first up, the homemaker gap. And this is not some abstract idea. Just look at these numbers. To replace all the work a stay-at-home parent does, you'd be hiring a full-time nanny, a chef, a housekeeper, a driver. You get the picture. It adds up to over $17,000 a month. That's more than $200,000 a year. Without that parent, the surviving spouse would have to figure out how to pay for all of this, all while trying to work and, grieve. It's an impossible situation without a plan. Next, let's talk about the employer gap. That life insurance you get through your job, it's a nice perk, for sure, but it can give you a false sense of security. Most of those plans offer a benefit of just 1 or maybe 2 times your salary. But you know what the experts recommend? 8 to 10 times your income. As you can see on this chart, that's not a gap. That is a massive canyon. And the worst part? That coverage usually isn't portable. If you change jobs, poof, it's gone.
Then you've got the insurability gap. This one is so important. Your health right now is your most valuable asset when it comes to buying life insurance. A healthy 30-year-old can lock in a super low rate for decades, but our health can change in a heartbeat. If you wait until you're 40 and you've developed a common health issue, those rates can jump. After a bigger health scare, they can skyrocket, or you might not even be able to get coverage at all. Your good health is basically a discount coupon, and it's smart to use it before it expires.
And finally, we have the debt gap. When a person passes away, their debts don't just disappear. The mortgage, the car payments, any co-signed student loans, credit card balances, they all become the responsibility of your estate. The average household debt in America is well over $100,000. Then you have to add the immediate cost of a funeral, which can easily top $12,000. Without a dedicated pile of cash, your family might have to sell the house or drain their savings just to clean things up.
Okay, so we've laid out the problems. It's a lot, I know. But now, let's shift gears and talk about engineering the solution. This isn't about fear. It's about smart, precise financial design. Life insurance is the tool we use to build a safety net that is strong, reliable, and perfectly designed for your family.
When it comes to protection, there are two main paths you can take. First, there's term life. It's really straightforward and super affordable. You get coverage for a specific amount of time or a term, say 30 years to cover you until the mortgage is paid off. The other path is permanent life, which, like the name says, is designed to last your entire life. It gives you a death benefit, but it also builds up cash value over time, which becomes a financial asset you can actually use. Now, to make this super clear, let's use an analogy. I absolutely love this analogy because it just clicks. Term insurance is like the airbags in your car. It's affordable, it's essential, and it's there to protect you in a collision. Permanent insurance is like having those airbags, plus a backup generator for your house. It doesn't just protect you in a crisis, it also provides resources and power you can tap into throughout your life. And that brings us to one of the most incredible developments in modern life insurance, living benefits. Seriously, this is a total game changer. Many modern policies now include features that let you access a portion of your death benefit if you get diagnosed with a serious illness. This completely transforms life insurance from just death protection into life protection, giving you funds when you're alive to help with medical bills or replace lost income right when you need it most.
All right, so let's put this plan into action and look at some of the hard data. Because once you see the numbers, the case for getting this done becomes, well, pretty undeniable.
The biggest objection I hear, time and time again, is cost. But the perception of how much this costs is completely out of whack with reality. People overestimate the price of a simple term policy by more than 7 times. The reality? A healthy 35-year-old can get $500,000 of protection for their family for less than you'd pay for a couple of streaming services each month.
And what does that say $30 a month actually buy you? It is not just a number, it's incredible financial leverage. A $500,000 policy could wipe out the mortgage, replace several years of income, lock in college funds for the kids, or pay for a full-time nanny for years. You're turning a small, easy payment into a life-changing amount of money right when your family would need it most.
Now, some people will say, you know what, I'll just save that money instead. Okay, it's a fair point. Let's compare. If you save $300 a year, after 5 years, you'll have $1,500. Nice. But if you use that same $300 a year on a term policy, you have an immediate $500,000 safety net from day one. There is simply no other financial tool on the planet that can create that level of security that quickly.
So how do you take all this information and turn it into action? Well, here is your blueprint for creating genuine, lasting financial peace of mind. This is about taking control of your family's future today.
I want you to ask yourself this question, and be really honest. If you were gone tomorrow, could your family stay in their home, pay every single bill, and keep living their lives for the next 10 years without crushing financial stress? If there is any hesitation in your answer, that hesitation is your answer. It means there's a gap, and it needs to be filled.